Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the March 9th, the magical Monday edition of today's Trader's Edge show. We're going to really get right to it with these markets the way they are. I want to be able to get and cover all the markets that you would like to have me look at for you. Of course, you can give us a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. If you'd be kind enough to put radio show question in that subject heading, that'd be great. And, of course, in our Tigers Den, any ping will do. So let's go ahead and get this show started. Right now we've got the Dow trading down 1,700 points out there. Amazing numbers that we're talking about. You know, the average, interestingly enough, over the last 10 days, the average price range on the Dow is 1,165 points out there. S&P is down 184. These are all 6%. NDX 100 off 5%. So all the indices in the red, with the exception of the spot volatility index, that's up $10 or 24% right now. Gold's trading back nearly $2. Silver 30 cents. Light sweet crude off $8, 20%. To the downside, I'm rounding here. Natural gas is up just slightly. T-bonds up 5 points. Of course, they're well off of their highs out there, and we'll certainly take a look at that. We won't really worry about what's leading to the upside. Mostly it's ETFs. We'll get AutoZone up $34. That's a big individual move stock-wise out there. That's for sure. Big move. Tesla is off 66, Amazon 64, Google about 60, Chipotle 47. Booking Holdings down 56, so certainly plenty to look at. I guess I ought to show you the charts out there. There we go. So let's get those here posted. So the questions that seem to be coming inside the Tigers Den out here, let me just expand this out and make sure I get to them. I think they're all about wanting to do just kind of a full overview of the market. And John is saying, can the NDX 100 be bottoming here? So let's just try to integrate both of those things into the same piece of it. So what are the interesting charts that we should be looking at out here? Well, first, I want to give you a perspective of the markets, and remember, when I look at charts out here, I still don't have the ability when I go back and look at historical charts to say what took place on that day. You know, so it has to be from memory during a time period or what have you. And so, just simply what we're going to do is just take a look at the technical aspects. We'll look at the one of my favorite movies, maybe yours too, The Good, the Bad, and the Ugly. I'd love to have played that little theme music as we were coming into the show out there. And I think today we should look at the good, the bad, and the ugly. The question is, can we find the good out here? Now, this happens to be a chart of the SPY. So, and we can do this for ETFs. We can do this really for any instrument out here. But this is taking us back. Well, I don't know how far does this take us back. Well, here, if we go back into the 2009 time frame, the black diagonal lines, that's what you're looking at out here, have generated real nice buying signals once they followed Stevie's 5-step Rhodes momentum indicator process. So with regard to the SPY out here, you're going to see that another one of those has triggered. Now, just triggering, as you can see here, as the markets were moving lower, it's not just about the triggering, it's about a 5-step process out here. And that's what newsletter subscribers are familiar with. They've seen the exact steps that I use so they can use it on their own out here. But just simply, and we're just looking at the Rhodes momentum indicator bottom signal. So here's the SPY. Let's simply type in the Qs out here and see what pops up to answer the question there for John in the Tigers Den. And the question was, is it possible that the NDX 100 is forming a bottom out here? And what I can share with you at this stage of the game, and here just pulling it back, it's kind of hard to see, but you go back here in the 2012 timeframe, you'll see some bottoms that formed out here back in 2011, and you'll see those in 2016, here in 2019. You'll see that same Rhodes momentum indicator signal that is present, and that is the pattern that is present right now. So here, John, really specifically to answer your question, is it possible? It is, but this is just phase one of that process. Phase two, at least, we would need to see some type of bullish reversal candle. We could even get that potentially by today's close. And we'll go into that. We'll take a look at that as well. But we could virtually put up anything. It wouldn't matter whether it was the let's put up the Dow. But in the case of the Dow, let's put up the Dow in terms of the indice versus the Dow. Well, I guess that didn't work real well. Oh, I know why it didn't work, because I didn't punch in the right symbol. Switching between systems always has me a little messed up. So here, let's just take a look at the Dow. Let's punch this up. You will see the Rhodes Momentum Indicator bottom signal. So at this stage here of the game, if we were just brand new into the markets, we were just looking for some type of pattern to help us identify potential bottoms out there, we would say, hey, we like this Rhodes Momentum Indicator signal out there, and we want to be able to learn more about it. So we've got that triggered here for all of the indices. And this is just looking at a bar chart here, just simply to show you what is present. And we can go take a look at nearly every indice out here. I don't know if it's everyone, but it's nearly every indice, nearly every ETF in the sectors, not all, but nearly all of them, to focus and pay attention to. For the general overview of the market and the general overview to try to answer John's question, is it possible that the NDX has bottomed here? We know what we have are bottom signals. Now, another cool chart, let me pull this one over. I think it's a cool chart, is a spot volatility index. Of course, you know that I think that's a cool chart because it provides us with great signals. Now, here's something that's really interesting, and it doesn't happen that often. Now, we see the Rhodes Momentum Indicator tops and bottoms occur much more frequently on individual stocks or indices or ETFs out there, and it does happen on occasion inside the spot volatility index, and that's what transpired on Friday. So Friday was the signal. But what Friday also was a bearish reversal candle. And so it is the high of Friday. So yes, that hammer this is a shooting star. So shooting star, the requirements are the market must be in an uptrend. That's the first thing. The second, the body of the candle must be twice the wick of the candle must be twice the size of the body, and there must be really a small lower shadow out here. And Friday's candle inside the spot volatility index accomplish that. Now, in the case of a hammer, just the opposite. The bottom of the hammer is support. In the case of the shooting star, the top of the shooting star, the high of the shooting star, is resistance. So even with today's action and everything, this pattern of a Rhodes Momentum Indicator in the spot volatility index is still in play, at least right now. Now, to take a look at what those exact closing prices would need to be for the spot volatility index, it's just going to be easier for me to just switch over to this chart, the symbols out here, and there's the number. The number to be watching today is 54.39. So if the spot volatility index closes below 54.39, that topping signal is still in place out there. The topping signal there, the bottoming, the potential bottoming. So in the case of the spot volatility index, that is a topping signal. The bearish reversal candle at the completion or the beginning or sometime during the Rhodes Momentum Indicator out there. So you've got that. So watch 54.39 today on the close. We'll continue looking at the charts. This is kind of interesting here. Here is a chart for the Dow. You can see its horizontal trading ranges, weekly chart. Take a look at a trend line coming off of the 2016 lows out here. Tag that to the December 24, 2018 low, and look where price is trading right now. Right on that support line as well. Right.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 1629, S&P down 176. Let's get back to the charts out here now. So here's what we established during the first segment out there. Nearly every indice or ETF, index ETF, futures contract, daily, we're in the daily time frame now, that we're taking a look at has the potential to identify a bottoming pattern. Price has been stretched. We got the Rhodes Momentum Indicator signals. I took you back to 2009 to show you the number of times that the signal has formed and then what the results were. You got a chance to see that. That was the first thing that we established. And the second thing we said was, let's go take a look at the spot volatility index, see what kind of signals are being generated there. And inside the spot volatility index, what we identified was Rhodes Momentum Indicator top. That one was confirmed on Friday. That's with the bearish shooting star candle. As long as price closes below that, that generates that. That's part of the good. This is part of the good. The bad and the ugly we're certainly going to get to. But right now we're just focused on not so much the good, but what the charts are communicating to you and I out here. And those things I saw. Was it Peak D or Coda? Somebody in the Tiger's Den had put something about slingshot. Those types of bottoms out there can create that slingshot move to the upside out here as well, especially once they form. Now, is it possible that it's forming? So to go back to John's question with regard, is it possible that what we looked at, in essence, that the indexes or any of the indices are bottoming out here? One of the ways to begin taking a look at that is watch intraday trading out here. So with regard to intraday trading, and we don't have a lot to look at because of the limit down situations that we experienced that began last night at about 10:20, 10:30, whatever that time frame was. And then again this morning, just a few minutes after the open, and then the second circuit breaker. But from that, we can just have that. That's the data we have to take a look at. So as we take a look at this, here's the interesting thing. First, let's take a look at the first retracement that transpired this morning. Now, the first retracement, I'm going from the low at 9:30. That was at 78.20 out here. We're taking a look at the NQ, by the way, to the high out here at 10:15. That high was at 81.19. Now, all that I'm showing here is the first retracement, which was very bullish. It was only a 0.382 retracement. So that was very bullish. Now, when price was able to, this is just a 5-minute time frame. And the reason why you're looking at a 5-minute time frame is because of the mere fact that we don't have a ton of data here. Look at all the data off to the left-hand side. It screws up really all my patterns, TD9 counts, all that type of stuff. So, going limit down didn't help out some of my technical signals. So now what we have to do is start falling back on just some of the other more traditional type of signals out here. So makes a 0.382 retracement. Unfortunately, as price was taking out the swing point, that was the high from 10:15. There were about 7,280 contracts. When price cleared that level, it was like 4,500, 4,800 contracts. You did get up to 9,400 contracts, so that was somewhat promising out here. But price just never continued to move higher. Now, what I would really be watching, even though it was just a 0.382 retracement, I'd still be watching that 80-40 level. Because if price breaks through that, now we'd be having to look for maybe an A to B equals CD to the downside pattern to set up a potential Gartley buy. And as I take a look at this 5-minute chart, it'd be tough for me to figure out logistically where to really pick up the C point of an A to B equals CD to the downside. But let's watch 80-40. I should be an area that I would be watching, John, to assist us, because that's the swing point it held earlier. Small swing point, 5-minute time frame, granted. But if price gets below that, you and I know that price could easily go make a run for the lows again. Or beyond that, 78.20. So I really think it's on the intraday piece of this puzzle that we need to watch out here. Okay, so that would be, let's say, the third item to be looking at. What else? What else should we look at out here? What else? Okay, so the what else is. Now let's go start taking a look at the good, the bad, the ugly. Let's try to put it all together. Let's do that by coming back to these charts here. So here's the S&P 500. So we got the S&P 500 daily time frame. You'll see it. It'll say 1 day up in the upper left-hand corner, so you know what time frame it is that Stevie is using out here. And you can see here price moving lower, doing less relative energy. Now what's needed is a bullish reversal candle. When the markets were up at their highs around 10:30, 11 o'clock this morning, what we had out here was we had what looked like a hammer candle. Of course, it doesn't look like a hammer candle now. So it's really all going to be about the close out there. And, John, I would say if we don't get any type of bullish reversal candle, even if this were to be a hammer candle, just the S&P, same thing inside the ES mini or the NQ out there, even if it is a hammer candle, because we have a gap to the downside, we could have both a bullish and a bearish message coming from it. But without a bullish reversal candle out here today, what you would need to see is one form tomorrow to help you to identify the Rhodes Momentum Indicator bottom. And then we know resistance is going to be Stevie's red line, daily time frame we're looking at. And this is the S&P cash around the 3048 level. Well, what if this isn't the bottom, Steve-O? What if this isn't the bottom? Where's price headed to? Well, where price would be headed to, or what we would want to do, is try to identify where's the next level of support. And the real next level of support on a weekly basis for the S&P 500 is 2570.41 to be exact. And that is its next weekly TD9 breakout level. You can see on a weekly basis we're kind of in the middle, right? We're below 2991 and we are above 2570. So this is really where the daily chart is going to have to kick in if there's going to be any kind of a bottom out here. Good, the bad. Maybe this is the bad. Where would the ugly be? The ugly would be on the monthly time frame chart. So here we take a look at the S&P 500. Look, it's got a confirmed Rhodes Momentum Indicator top. That was a shooting star candle, by the way, January of 2020. Kind of similar. We're looking at a shooting star on a monthly basis for the S&P 500. We looked at a shooting star for the spot volatility index. Again, the month of February out here. But yeah, price exceeded the high of January, but closed back below it. That was resistance, price below Stevie's green line. The monthly chart looks ugly. With wave number 7 is where Stevie's got this thing at, and this would say price could move all the way back to its breakout level. That would be 2020, 22.45. Am I saying that that's where price is headed to? I'm not. It could head there. Oh, great, Steve-O. You're doing me one heck of a lot of good out here. Here's the heck of a lot of good. Here is the heck of a lot of good. We could call that a candy bar, I suppose, out there. And that's this. Now, granted, this is the Dow out here, and I'm sorry, it's kind of let me put up the S&P 500, SP 500. You'll see it on the daily basis. Well, I guess we saw it anyways on the other chart. But again, these Rhodes momentum indicators, once they trigger, and John, when you're taking a look at how the low was made back in December, this is the important for not using the trigger of the signal to say, okay, time to jump in, but instead to use the 5-step pattern to be able to assist you with regard to identifying, in this case here, a bottom. So there's the potential for a bottom. We just don't have the confirmed signals yet. And as we pull this back, that pattern is so important. We want to continue to pay attention to it. We just simply need the market to communicate to us what it wants to do versus me try to tell you what it's going to do. Sharing with you the patterns are in place right now. And if this pattern doesn't identify a bottom, well, those other levels on the weekly and the monthly, yeah, that's where price should move to. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that we'll even even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're continuing on with the charts here. And really on a day like today, what we're trying to do is we're trying to understand what the daily signals are, any signals, any time frame. And we're also looking for support. Where is support? So now what you and I want to do is we want to step back and we've covered that a little bit by taking a look at some of the indices out there. Was primarily, I guess, the S&P 500. But here, let's go through 3 of the 4 equity futures contracts. Let's take a look at the multiple time frames, daily, weekly, monthly, quarterly sets of profiles out here. So the next level of support in the ES Mini the first level of support on a weekly basis was hit this morning. The actual low so far today is 27.15. 27.17 was that level of support. What's that level of support? That is the monthly center of its bullish structured profile out here. So if you and I were just going to focus on a monthly profile, let me just expand it out. That way nobody gets confused as to what we're looking at out here. If you and I were going to look at this and we were going to identify the 2 most likely areas of support for the ES Mini for its intermediate term time frame, you and I would have selected 26.52 to 27.17. And the reason we would have done that is because that is the bottom of the profile on a weekly basis, intermediate term time frame, where there's buyers, predominantly buyers there. And then what we also know is at the center of the box, there's both buyers and sellers. We're going to call them even Steven, equally distributed, 50-50. And since there's buyers also at 27.17 with some sellers and buyers at 26.52, this is where there should be strong support. So what you're really watching for, this is where it would get to the ugly side, would be some type of close below 26.52. But from an intermediate term time frame, let's keep this into perspective. Intermediate long-term time frame out here, nothing is busted yet with regard to support levels. And we took a look at the support levels with regard to the TD setup breakout levels on the monthly time frame. Those are well below 26.52 out here. And this is for the ES Mini. So it gets back to answering the question for John, is it possible that we've seen a bottom? What I can share with you, what you can see, what you can answer for yourself is, hey, the ES Mini has made it back to a level of support that you would have identified. And until price gets below that 27.17, 26.52 doesn't really come into play. You can see the quarterly over here, and price is back below the top, but really we have till June for this. So we're kind, we would come to this. We would come take a look at this if there were a close in the ES Mini below the bottom of that monthly profile. Now let's switch over and take a look at the NQ. See, this is all about a mission of searching to understand support. The most fundamental, most important thing for us to take a look at. Because when support gets busted through, you go down to the next level of support, and you've got to try to identify that. That's really kind of the beauty of taking a look at this chart here, because we have daily profiles, we have weekly profiles, we've got monthly, and we've got quarterly. Now, in the case of the NQ, and we take a look at price below the daily and the weekly profile out here. By the way, 84.20 is going to be a real key level to be watching as we come into Friday. It's only Monday. But if we do take a look at the monthly profile here versus the S&P 500, the ES Mini, here, because price above the top of the box, you want to talk about lack of damage from the standpoint of support for the intermediate to longer term time frame. Boy, it's right here inside the NQ. It doesn't mean there hasn't been a huge decline off of the high out here, but I just want to keep some kind of perspective for you. So right now, on a weekly basis, the NQ has not even touched the top of its profile, and that would have to be the first level of support, 77.52, and it's nowhere near, I can't say, it's not near the top of the quarterly profile. So the NQ, to the extent that you are going to try to take a trade to the upside, would you go with the NQ, based on what we're looking at, or the ES Mini? Well, I'll let you answer that question. I know how I would answer, but I'm going to let you answer that question. Now, let's go take a look at the Dow. And I can't do this with the Russell 2000 just simply because I don't have quarterly and monthly data out here because the ticker symbol changed a year and a half ago, whenever that was. But let's look at the Dow. The Dow looks really way worse than the ES and the NQ out here. And we do have to pay attention to the Dow. It's below the daily. It was perfect on Friday. Friday was a wonderful test of the bottom of that bullish structured box, but today has crushed right through it out here. The weekly, well below that, and now below the bottom of its monthly profile and trading inside of the quarterly. So without any other profile support, daily, weekly, monthly, then the only support level we can go to inside of the Dow is in the area of 21,139, really all the way back to 18,310. But right now it would be the 21,139 level. However, I don't want to just leave it right there. Let me just pull this over here, and let's try to do it. Yeah, I don't know if it'll give me enough monthly data or not out here. Shoot. I could put up the continuous contract. That'd be one way to for sure get it. Give me a second here to let this thing populate. Let's get to monthly time frames. Yeah, let me do this. That didn't work, did it? But let me put up the continuous contract, because what I want to do is be able to get for you the TD9 count breakout level. So here, and disregard the, disregard the profile because price is below. This is the monthly, below the monthly profile out here. So the other level, the other breakout level on a monthly time frame for the Dow is in the 19,607. Let's come back to the weekly time frame. So the weekly time frame, the levels it's dealing with right now, 23,467, which basically about where it hit earlier. So that takes care of our profile levels and helping us to understand what the market is doing, ES and Q out there. And you know what I want to do here, because I know there's folks that are intraday trading as well, and we'll just give some folks some things to watch. And now I'm taking a look at the ES mini, the 120-minute time frame, and here's the 120-minute time frame. And I'll switch back between 120 and 60. So here in the 120, a real key level to be watching. See how the oscillator and change line has really acted as a great resistance level right now. That's priced at 2810. So you're going to want to use the 2810-ish area to be watching out here. But so far, we've seen the counter trend rally, found resistance at the bottom of the 120-minute time frame. That was at 2834 out there. I'm going to believe that the bottom and the center are at the same price point, along with Stevie's red line on that time frame. The 60-minute, you can see a nice hammer candle that had formed out there during that first 2-hour time frame. And here on the 60-minute, we can see that price also formed a hammer candle, Rhodes momentum indicator, and price right now trading below 27.76. Hourly time frame chart. This hourly time frame does not complete until 2 p.m. So 27.76. If you see price close above that, then you have rejected, or it had price rejected Stevie's green or red line at this stage of the game out here. Nothing really on the 30-minute time frame. Nothing much on the 5-minute time frame for you. Okay, so let's go to some questions out here. I believe we have one that came in from Tom. Tom G. Tom, nice to hear from you. And so let me get this off the chart and read Tom's question. Tom says, good afternoon, Steve. Good afternoon, Tom. Wow, what a market. Yeah, everybody's going to agree with you there. I would like to get your opinion on the SVXY, short the VIX. Seems like there may be a short-term bottom here soon. So what Tom is also saying is a short-term top in the VIX. And okay, so I got you there. Another thought is to take a look at gold. You just exited a long trade in dust. Would like to see what gold and oil is doing. So let's go to the VIX first. And we covered that, but I'll just reiterate, Tom. If the spot volatility index today closes below 54.39,
CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That's That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you'd like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Sorry about that. I'm so focused on the charts and trying to provide you with information, I totally ignored the clock to know that we were going into the breakout there. So I don't even know where the cutoff was. But back to Tom's question, who has got an interest in shorting the volatility index. So, Tom, as long as the spot volatility index closes below 54.39, I can, because of the shooting star, the Rhodes momentum indicator signal, and resistance holding, then I can see that as a potential trade out there. So that's really what I would be looking at. Now, another thing for you to look at, and this is, I know, because you use some intraday charts, and today I'm looking at some intraday charts to help guide us as to what the message of the market is. So here we've got this is the NQ. I'm just going to leave the NQ up out here because this is what you and I looked at was the NQ is the strong dog. So let's get your message for maybe your trade on shorting the spot volatility index from the NQ. And what we can see is that on a 5-minute chart, that's what we've got out here, there is the potential for a Gartley buy pattern to form. Here I've drawn in what I think is the reasonable A to B equals CD down pattern. 80-12 is going to be the 1-to-1 level, but the retracement out here was less than a 0.618 retracement. So more likely than not, it really brings into play the 1.272 or the 1.618 area. Now, I can't guarantee that, and I'm not saying that's where price is going to stop. In this pattern here, much like what we looked at for the Rhodes momentum indicator, and really, quite frankly, for any pattern is that you might want to trade out there, you really should know your bullish and bearish reversal candles out here. So in this case, Tom, if you were to see some type of bullish reversal candle form anytime from now, this is a 5-minute chart, so we'll say anytime after 145, because this would qualify as close to the 1-to-1 A to B equals CD to the downside, then that might be your signal. Now, granted, this is a 5-minute chart. This is intraday, and but this would be it could be, not saying it's going to be, it could be a Gartley buy pattern. And this is the only intraday data that we really have to work with out here. So I would hold off on that trade until I at least saw some type of Gartley buy pattern, should you get it, on the intraday charts for the ES or the NQ. Here, let's put up the ES now. Let's put that up on the screen. Give me a moment here. And let's see what pops up for the ES Mini out here. And let's just get rid of that retracement because that was the earlier retracement out here. And let's draw in its A to B equals CD pattern. And sorry, A point is going to be the high. And here what we're trying to do, folks, is try to identify the potential for a Gartley sell pattern. So for the B point, I'm using the 1245 candle, and for the C point, I'm using the 1 p.m. candle. And so the 1-to-1 level, different than the NQ, in essence, the ES Mini is basically hit it or very close to it. 27.49 would be that. We're at 145. If by 150, and right now you've got a bullish piercing candle, but we're 12 seconds into the candle. So wait the full 5 minutes out there. But if you did get a bullish reversal candle, here would be an intraday Gartley buy pattern. And for those of you that like Gartley patterns out there, intraday traders, you'd have to say, something to think about. But you've got to wait for the candle to complete. So, Tom, I hope that helps you out. With regard to gold, I know you wanted to look at gold, and gold is looking like a potential trap out here, trap for the bulls. And here's the reason why. See, when we take a look at gold right now, everybody for the most part, and I said for the most part, because not everybody, but for the most part, most folks are only looking at gold and price in U.S. dollars, saying, hey, it's up just slightly, 1673, well off its highs. But what we got to do is really understand that we're not the only ones trading this market. This is a one-world market out here. And therefore, how is gold trading today in those other currencies? Look, we've seen huge swings in commodities, whether it's precious metals or whether it's treasury bonds or the markets, and understanding how things are priced so that how it appears on other traders' screens around the globe is muy importante. Right now, gold expressed in euros is trading at a lower low than Friday, even with all the fear trade stuff going on. Are those traders bullish, or are they as bullish as they could have been? Traders of gold in yen, well below the low of, in fact, it has pierced, it's not trading below right now, but it has pierced the big downdraft day from back on February 28th out there. So a lower low below that. That's not bullish if you're over in Tokyo and you're trading gold. In fact, this is suggesting an A to B equals CD to the downside. And you did make an intraday lower low for gold priced in pounds out here. So, Tom, with regard to your dust trade out here, it's really tough with all of these emotional swings that we have inside the markets out here. But I will just simply leave this chart or set of charts here for you to assist you in considering that trade that you're looking at. And then lastly, you had wanted to look at oil. So if we take a look at oil, what's the easy way to do that? I think it's come back to this chart, and I think it's going to be to do the following. Let me get up my synthetic contract here for light sweet crude. And the question is light sweet crude potentially making a bottom. And all that we can say is the following. Well, I suppose there's a bunch of things we can say. But one of the things that we'll say is, where is it trading back into? Pull this back, keep pulling this back. This is the monthly time frame chart out here. And it's trading back. Well, I guess this wasn't the chart I wanted. Or was it? Nah, this wasn't it. So let me try to do this on sign F on a monthly. There we go. So this was the chart that we wanted to take a look at. Now, this is a monthly time frame chart. And if you're asking, this is pulling back into an area of previous support. The question is, will that previous support hold out here? And where is that previous support? And have we hit that previous support? And the answer is no, close but no cigar. But 2605, that was the low from the trading session back in February of 2016. And so gold is showing the potential No, not gold. Light sweet crude. So in the case of light sweet crude, what you'd have to do, Tom, or what you would want to do, is just like we were in the case of here. Let me put up the synthetic contract. Then so I have to would be watching the intraday timeframes out here, and much like the A to B equals C to, the Gartley buy pattern that I would be looking at here, for me, Tom, would look like this. And it's not using the actual high, but there was a retracement all the way back up to that close to that high. So I'd be using the 1205 bar, and then I'd be using the 1245, and then even though it was a very small retracement, that's what I would use. I'd be watching for some type of Gartley buy pattern to form in light sweet crude before I would step into it just yet. But so far, so good. Intraday, right? A series of higher lows and higher highs so far. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let's try to recap here as much as we can. Here's the 5-minute time frame chart that we're looking at. And the reason is we're looking at this intraday chart out here more so because of just trying to understand what the market is communicating to us now. And with the with going limit down a couple of times out here, just all the chart data on the left-hand side here today is somewhat useless for Stevie's patterns out here. What's not useless is the mere fact that we have a potential of a Gartley buy pattern on an intraday time period chart. Now, it's the 5-minute time period that I have up on my screen out here. It wouldn't matter if we're looking at 5 or we're looking at 10 out here. But you can see that the 1-to-1 A to B equals CD level of 27.49 has been tagged. Does that mean you would step in and try to buy this market? No. At least allow the market to prove itself to you. The way that would prove itself to you that the A to B equals CD pattern was complete is you'd see some type of bullish reversal candle. That would be the first thing. The second thing that you really need to see is a level of resistance get taken out. What's that level of resistance? Well, Stevie's red line would be a good one. And at this stage here, that red line number is at about the 2766-ish type area. You're also going to be in bar 9 of a TD setup 9 count to the downside right now. That is on the 5-minute time frame. So you've got a couple of different patterns if they could form as price is pulling back into a fairly high volume bar out there. And not that I want to over exaggerate the value of that high volume bar out here. That's the bar at 950. Whether that was a short covering rally or an initial short covering rally, watch intraday right now to assist you with helping understand what may be going on inside of these markets. And watch that level on the spot volatility index as you come into today's close for some type of signal. 54.39 at the moment is trading at 54.74. So a little bit above that level. A rejection would be a close below 54.39 on that spot volatility index. Folks, hope today was helpful to you. Thanks so much for being tuned in, and stay tuned because 2 more great hours are up next. You've got David White, our favorite polar bear, and then Obi-Wan Kenobi to take us home from there. Have a magical Monday, folks.